Hi everyone, welcome to the second episode of Technical Analysis for Beginners by Exo Ventures Consultancy. My name is Daniela and I'll be guiding you through this series where we discuss topics of technical analysis such as price, candlesticks, support and resistance, different indicators, and so much more. You'll get to learn a lot and be ready to embark on your trading journey with us. Now, before we start, I just want to say that if you find anything in this video useful or just found it entertaining, please make sure to like. It really does help us out a lot. And also make sure to subscribe and hit the bell notification to stay up to date on this series and all other videos that we provide here at Exo Ventures Consultancy. Okay, in this episode, let's start off with the show. Okay. In this episode, we will be discussing several traits about support and resistance. Okay, in this episode, I'll be sharing what support and resistance are. I'll also give a small recap of last week's video, which was on technical analysis, what it actually is and how do you use it, how we use support and resistance in trading and in this technical analysis method. Also, how to spot support resistance zones on the chart and how to draw them yourself. And lastly, the most important, how to actually use support and resistance zones when trading. Okay, are you ready to get started? Before we do get into the juicy part of this video, please take this disclaimer into account. So the content of this presentation is not financial advice, is not investment advice, does not constitute any offer or solicitation to offer or recommendation of any investment product. It is for educational and entertainment purposes only. I highly recommend that you do your own research on everything that is discussed in this video and in any other content provided by Exo Ventures Consultancy. If you've seen any of my other videos before, you know that I also highly recommend that you do your research on anything that you find online at all. And as we like to say here, please verify and validate everything for yourself. Don't just take everything by the word when you find it on the internet. Okay, now that the administrative parts are over, let's get into the actual content of this video. So, since this is the episode on supporting resistance, let's first discuss what exactly is support. So, the official definition is a thing that bears the weight of something or keeps something upright. And when we translate this into trading, it's basically a zone or a level that holds price or keeps it up, right? Now, I don't know if you can see the background image that I have on this presentation, but basically that little stick figure is holding the weight of all of those blocks that are trying to fall. Similarly, when price is trying to fall, this support zone will be holding up the price. Right? Okay. Now let's get into resistance. So the official definition is again the impeding effect or stopping effect exerted by one material thing on another. Now translated into trading, this is basically a zone or level that stops price or prevents price from moving forward or further. And usually when price is going, it is going up. So this zone stops price from going any higher. And again, I don't know if you can kind of see the picture that I have in the background of the presentation, but it's basically a man running and then there's a parachute behind him. And this parachute is acting as resistance because it's stopping him from moving forward. Okay, so now you have an idea of what support is and what resistance is. Now let's do a short recap of the last TA for Beginners video, which was on technical analysis itself. What exactly is it? So technical analysis is a financial analysis method that uses patterns in market data to identify trends and make predictions about where price might go to next. Now, if you didn't see that video, I do highly recommend that you go see it. You can probably find it in the description below. But basically what you're doing is you're gathering market data, which can be price, it can be volume, it can be different indicators such as the moving average, RSI, stochastic, MACD, etc. Different market data To identify trends. A trend is the general direction that something is moving into or developing into. So you can have an upward trend, which means price is generally moving up, or you can have a downward trend, which means price is generally moving down. So now that you have an idea of what technical analysis is, it's just using different information that you find in the market to make predictions about the future. Okay. So now how do we use these support and resistance zones in technical analysis? So whenever you see TA, it means technical analysis. And whenever you see these SR zones, that's support resistance zone. Okay, so as we see on the left side, support is when price is moving down towards a level, and then when it reaches this level, it will increase from that zone. That's a support zone. And then on the right side, you can see resistance, which is price will move up towards this level or this zone. And once it reaches it, it will decrease back from the zone. That's a resistance line. Important to know these. You can also use just SR zones if you're not sure if it's a support or resistance zones. And it's also important to note that these zones can flip. So a zone that was previously support, once it gets broken, it can turn into a resistance zone. Okay, let's get into the next part of the video. All right, so next we have the factors that create these zones. So we are going to see it in the next slide, but basically when you have a support zone, it's a lot of buying interest that's accumulated or concentrated in this zone. We call this buying interest demand. Basically, price reaches an area that people find attractive to buy into. And so there's a lot of buying interest or buying activity going on at that zone, so price moves back up. Got it? Now for resistance, it's the opposite. Price reaches a zone where a lot of people intend to sell that asset or commodity or cryptocurrency. And so there's a lot of selling interests or supply. And we call it supply because you are selling this asset back into the market. So you're providing more supply of that thing back to the market. And then basically that area where there's a lot of activity of selling becomes resistance. Okay, that's how these areas get created. Now you can see a more clear example. I'm going to move myself out of the way. Okay, now as you can see in area A, price just came down quite hard from a higher price. And then you can see from the long wicks right there at area A that there's buying interest. People were buying that in this case we're talking about Bitcoin, but any asset, commodity, cryptocurrency, or stock. You can see from the long wicks, and again, if you don't know what this is, please go back to episode 1 of TA for beginners so that you can know how to read these candlestick patterns. So zone A is a support zone where there was a lot of demand. Unfortunately, price did continue moving down towards zone B. Now in zone B, you can also see that there was buying interest, so that forms the second support zone. As I just said in the previous slides, a support zone can turn into resistance zone when it gets broken. So the zone that was support at A has now turned into resistance. As you can see, from B, price moves back up into area C, and it touches the line and moves back down towards zone D. Again, it's a support zone that's holding, so price reaches D and then goes back up into the same zone at zone E. Then it goes back to F, then goes to G, and in the area around G, you can see that the price didn't even touch the line or the zone. But the overall area has people ready to sell, and then at the bottom, it has people ready to buy. Okay, now let's go into the next one. How do you spot support and resistance zones? Now, as you just saw from the previous slide, it's an area where price touches the zone and then rejects from that zone at multiple occasions. So you can see that price was rejecting at spot A, spot C, and spot E, right? And then on the bottom at the support area at B, D, etc., there were multiple occasions where price rejected from the zone. So how do you spot these zones? So first of all, you want to zoom out of the chart. You don't want to have a few candlesticks to look at. You want to have a lot of candlesticks, a lot of data to be able to very easily see the zones. Next, you want to give more recent price action more importance than older price action. Now, what do I mean by this? What I'm saying is, oh, you can't see me anymore. Okay, now I'm back. So what I'm saying with this is, if you have the chart zoomed out and now you have data from January until August, in this whole area, you're gonna be able to see different support and resistance zones. Now, what you wanna do is give the price action that's happening in July and June, so those are more recent price action, more importance than information that you would find in like January and February, because those are older price action data. Yes, get it? So basically, more recent is more important than older, because that's going to affect price moving forward much more strongly than older information. Right, and the third thing on how to spot these zones is you should be able to easily and very obviously see these levels. If you're gonna have to try really hard to see a zone, then that's not a zone. These levels are gonna be very easy to see. It's gonna be very clear, right? Okay. Now, how do you as a trader draw these zones onto your chart? There are a few things that you need to take into consideration when doing this. The first is to add lines or these zones, and then don't be afraid to adjust them if you need to. So let's say you zoomed out, you made a zone, and then you see, oh, you know what? Taking into consideration recent price action, you should move the zone a little bit lower, because when you first added the zone, it was taking older price action more into account. Then that's fine, you just adjust it as you should. And the second point is to keep your chart clear. It has to be very understandable and it can't be like cluttered and messy. Keep only the lines that are actually obvious, and don't overload your chart with too many lines, because then you're not going to know which one is important or not. So see the lines that are very obvious and very clear, and only focus on those, and the lines that have the most amount of touches. You don't want to have a chart that has like 20 support and resistance lines. Now I'm gonna give you a clear example. I'm gonna move out of the way.
Okay, I'm going to be recording this on my phone, so the audio might be different, but let me show you how to paint these support and resistance lines. So it's going to be very simple, just all the clear lines that I can see that have a lot of touches on them, both support and resistance, those are the lines that we're going to be drawing. As you can see, I'm not taking too much time, I'm just going very quickly through them. And in a second, I'm going to also show you which are the areas that I'm looking at that constitute multiple touches. So over here, for example, you can see this was a touch. And similarly, I'm going to just go through the entire thing, showing you exactly what I'm looking for to see if this area is an area of support and resistance. So it's just going to go through the entire thing, indicating where I see the most touches. And as you can see, while I was adding some of these lines, I did have to adjust it to see where was the area that had the most hits, rather than just one very clear area that was higher up or higher low. I had to sometimes adjust them slightly higher or slightly lower. I'm just gonna go through it. As you can see at some of these areas as well, price did go a bit further through the line, and with some other areas price didn't even reach the line. But it's the fact that price gets close to this zone and then rejects from it. This one, for example, it didn't even touch the zone, but it still counts as very sharp movement towards the zone and then rejection. Okay, technically we can still add one more zone over here. Right, these are also important areas. Alright, so this is basically how you see and spot these areas. There are more in between, but I don't want to overload the chart with too many lines.
Alright, so how do you use these support and resistance zones while you're trading? And it's important to note that just like every other market data that you're using, it's about finding the highest probability of a trade working in your favor, right? So I have some points here on the support and resistance zone holding, what you should look for. And I also have on the right side points that you should look for that have the highest probability of the support and resistance zone breaking, right? Okay, so when you see that there's a very strong move towards that zone, then there's a very high chance that the zone is going to hold. So basically, if you see only green candles working into a resistance zone, there's a high likelihood or probability that that zone is going to hold and price is going to reject. Or if you see very big bodied candles moving towards that zone, it's probably going to hold. And also in the similar line as that point, you don't want any choppy movements reaching towards that zone. Basically, if there are choppy movements going up into the resistance or going down into the support, there are multiple levels where someone can take a trade that's opposite your trade. If you can go back into the previous slide on how these zones are created, you know that if there's a lot of buying interest, then that zone is going to hold. But if there's choppy movement going towards that zone, then there's a lot of areas where someone can be selling, and then they're going against your trade of buying. So you don't want choppy movements, because then there's going to be a lot more interest going against what your trade is going to be, right? Okay, now let's go into what to look for if the zone is going to break. So the first is that if you're going into a resistance zone and you're seeing higher highs and higher lows forming, then there's a high chance that that zone is going to break. Again, with support, if you see lower lows and lower highs forming into support, then it's probably going to break as well. And the last point that I want to mention here is if you see that price is showing a buildup of pressure, and you can combine that with a flattening moving average, if it's doing this very close to the support and resistance zone, then it's probably going to break. And in the following episode, where I'm going to talk about moving average, you're going to see what I mean with building pressure along with the moving average. Okay, so now we have some extra points that I just want to discuss on how to use these support and resistance zones. So, as I already mentioned, I think, before in the video, all of technical analysis is most effective when you're using it with combining it with different other market data or information. So, similar with support and resistance zones, you want to use this tool in combination with other tools. So, you want to combine it with candlestick patterns. You want to combine it with other TA tools like moving average, like volume, like trends, etc. You want to be careful with fake outs, that it gets into the resistance or support zone and you think it's going to break, but it actually is going to hold after all. You want to be careful with that. And in our Casual Crypto Chats video on bull traps, you can see kind of how these fake outs happen. Next, you want to verify any information if there's any news, information, rumors circulating while price is reaching these zones, because this can also contribute then to fake out situations. And lastly, you want to control your emotions and just follow whatever it is that price is doing. So let's say price is reaching one of these zones and you have the expectation that it's going to do something. Don't trust solely what you are expecting. Just follow what price is doing and then control your emotions, whether it's fear, whether it's greed. Stay calm and try to be as objective as you can when trading. All right, this is turning out to be a very long video, but basically what you learned in this video is the following. You learned how or what exactly support and resistance zones are. You learned what creates these zones, which are the buying pressure or selling pressure, demand and supply. You learn how to spot these zones in the chart and how to draw your lines and zones. And you also learned how to use these zones in trading. So now, combined with the first episode, you have how to read price action and candlestick charts and candlestick patterns. And now you also know how to use support and resistance zones. In the next episode, as I just said, we're going to be moving into moving averages. So make sure to follow along on the series to learn more about that. Okay, and that's basically it. Thank you so much for watching. I hope you learned some valuable information here about trading and that you can start applying this already within your own trading practices. And remember, if you did find any of this useful, entertaining, or just you liked the video, make sure to hit the like button and also make sure to hit the subscribe and also hit the bell notification to follow along every time we upload a new video, because this will make sure that you keep following along with the videos in the series to get to know the full range of technical analysis, and also follow along on other videos that we upload. We have a casual crypto chats video where we discuss anything that's trending within the markets. Okay, that was it for me. This is a long video, so I'm gonna cut it short. Thank you so much for watching. Have a great day. Bye.